Evolution Capital is the first UK corporate finance boutique to exclusively focus on providing advice to the ICT sector. We are the leaders in our field. With activities spanning 3 decades, we have provided strategic and transactional advice to over 200 technology entrepreneurs, shareholders and management teams of both privately owned and public companies. We deliver outstanding transactional outcomes by unlocking intrinsic value in our clients' businesses, by providing expert advice based on meticulous analysis and robust methodologies. This is who we are and how we do it.
So Duncan, sitting together in front of the Christmas tree this year, is quite different to sitting next to the Christmas tree and having our roundup last year. If you look at the 12 months running up to Christmas last year, can you give me an idea of what the transaction team went through and how different that is to this year?
Yeah, I mean it was a very difficult period, as we know, unprecedented with the pandemic. The year actually started off very well.
Yeah, we were steaming along.
We were doing very well. We had plenty of high quality transactions in the pipeline, and then
March came along, bang.
Everything shut down.
Yeah.
The market was shut basically for 3 months at least. A lot of the buyers had decided that they were going to put their activities on hold.
Yeah.
And nothing really happened.
And then by the autumn?
So by the autumn, I think a lot of the buyers had decided that they were now behind their plans and they had to get on, and plenty of funding still available. They had to get on and find the right opportunities. I think everyone had started to become a little bit more used to what was going on by then, and the sort of buyers in the market just they came back in quite strongly at that point. In addition to that, you also had the private equity houses who the money's always been in the market, and again that has seemed to be largely on pause. But our sector has proved very attractive for private equity backed buyers. So they also came into the market, some as new entrants, and that meant that valuations had to some degree been maintained and enhanced.
And there were some other factors, of course, back in the autumn that emerged, in that there was clearly a willingness from sellers to want to enter into a negotiation after that difficult period of 6 months. They were quite keen to have discussions with buyers, and of course we had the threat of the changing tax regulations and laws. Can you tell me how that affected the transaction team?
Yeah, absolutely. So the entrepreneurs relief had been talked about for quite a period, for the last few budgets before last autumn, as being something that could be withdrawn or certainly reduced. And then after that sort of first 6 months period, if you like, of since the first lockdown, combining that with talk still of the entrepreneurs relief being withdrawn, most owner managers would have asked themselves, what is the value, what am I going to do, what are my real objectives now, and what is the value of my primary asset, which is the case for a lot of owner managers. Their business is their main asset. So I think there was the transactions started to happen again, so it's only natural really to think about what that means for their business, and whether a transaction might be what they were looking for, and whether they could achieve maximum value.
So here we are, 12 months later, we've completed 10 transactions during the pandemic period, and very differing transactions that they have been. What do you think were the sort of major challenges that we faced, over the last 12 months, and how do you think we kind of dealt with them?
I think each transaction, as you know, brings its own challenges. We have a a real focus on preparation and trying to really get beneath the skin of each business that we advise on, and that hasn't changed. But as I say, it's thrown up different challenges for different businesses. So we've had to look through the customer base and see what the risks are from a buyer's perspective, and that to some extent has been borne out in the buyer's due diligence. They've been looking in a more detailed and comprehensive way than I've ever seen in my 25 years in corporate finance. And that has meant that there's a natural instinct for buyers to want to, particularly with the still uncertainty in the market despite the activity, that's led to buyers naturally wanting to take a little bit longer to see another set of management accounts and another set of management accounts, just to try and make sure that they are buying what they think they're buying.
Yeah, I mean, you said to me so many times that the questionnaires are like 3 times the size now. That they keep asking for more updated information on performance as we're going through the programme. I think you know, what you said to me most recently was quite telling, in that the amount of work that we now have to do to get a £10 million deal where it's been bought by institutional money over the line is quite similar to what we'd have to do for a £25 million value deal 2 or 3 years ago. I mean, is that a trend that is going to continue, or do you see us going back to shorter DD programs?
I think this is a good question.
Yeah, I'm good at good questions, you know that.
I think to a degree it's here to stay. We're not out of the woods yet, it seems, from the pandemic. We've got the new strain out, and we have to wait to see what the impact of that is, and then of course there may be more further down the line.
Where do you see due diligence has become focused? Where's the questionnaires and the increased work coming from? What are the things that buyers seem to be homing down on now when they're looking at risk in a transaction?
Customer base and contracts and the services offered, and the sort of resilience of the base. How concentrated it is. So customers and contracts are always going to be key, but there's been increased scrutiny around all of that. And the other thing from a financial perspective is looking at sort of one-off items, and whether that's sort of revenue or costs, and really understanding what the underlying maintainable performance of the business is. I think there's been a lot more attention focused on that, almost a sort of what happens if there's a doomsday scenario, which has always been considered to some extent.
Is there things that buyers can be doing in order to prepare for this extended investigation into their business?
Absolutely, and as you know, the preparation that we see as being key to maximising value for sellers, and as we've always said, the earlier you can start preparing for a sale, the better. So there are always things that can be done to enhance value and deal structure and such like. And I think what's changed, nothing's sort of changed in terms of our ethos sort of around that, but we do know now what these buyers are particularly focusing on, and there is a sort of real COVID sort of view to consider. So there is more preparation that needs to be done, but largely we've always been focused on preparation and advising companies to get everything in order before you start an actual sale process.
Since the initial lockdown last year, we've had a very challenging period in terms of transactions, but But we've done okay though, haven't we?
We've done okay, and interesting because we were talking about it earlier, and what has been the factor in terms of us, achieving what we have over the last 12, 18 months, and getting these 10 transactions away. And I think I'd have to say that the tenacity and the skill of our clients, the shareholders and the business owners themselves, has been a factor that has enabled us to achieve that success. Thinking of 3 or 4 guys, that have been absolutely incredible in terms of the work they put in achieving the results that we have together.
Yeah, and have you noticed any sort of common themes on either the buy side or the sell side?
I think as we talked about earlier, a number of people were driven to look for a sale following the period of the pandemic where they had a chance to think about whether they wanted to run on for another couple of years, or was this a good time to have a conversation and potentially hang up the boots. And then the tax thing emerged at the end of last year, and I think that sort of pushed people on to thinking, well, if I've got to come back, come out of the pandemic and start building the revenues up again, and take on new technology. And if I work for another 12 months, I could be going back in value because I've got to pay all this additional tax. So I think that was a factor that led to on the shareholder side of wanting to explore the potential for a sale. The buyer side was quite different in that we had all the buyers come back that had been to ground for 3 to 6 months, all suddenly wanting to meet and explore deals again. But we had a whole bunch of new folk during the parade, and wanting to buy their first platform in TMT. They were driven there because traditionally where they invested potentially wasn't the right thing to be doing right now. So we had people that had invested in travel and hospitality that were wanting to invest in TMT. So that was a noticeable difference in who we were talking to.
And that and what have you seen in terms of the impact on the valuation multiples because of that? And
so clearly the multiples are very much driven by profitability. The more profit you make, the higher the multiple is going to be. But then if you look within that, you're going to be looking at the quality of earnings. And the quality of earnings, as we've developed a methodology over the last 20 years, it's quite different for a business that has a lot of one-off revenue compared to a business where there's a higher loyalty of customer spending. So the buyers were clearly looking for sustainability, and the businesses that demonstrated high level of earnings were definitely demanding a premium.
And as we know, across the sector, the valuations have broadly held up and in some cases enhanced, but that's not always the case. I mean, what's the sort of difference between those who've done rather better and those who perhaps haven't done quite as well within the sector? I
think probably two different factors there. Businesses which have generally a higher percentage of recurring revenue have done better, but also businesses that have were serving the right sectors. And in the previous pandemic, it was businesses were downgraded that were serving businesses of estate agencies and finance companies, and in this sector, it's been travel companies, and hospitality, and events businesses. So, the buyers have become quite nervous about which customer base a business was serving, and that has affected the valuation positively or negatively.
Yeah, and the whole working from home thing, very very topical. What about businesses that have been able to capitalise on the opportunities around that?
So again, two factors. We were very lucky in that we had already installed video conferencing prior to the pandemic, and all we did was double up on it, and so it enabled us to continue to work through the period. For our clients, I think they fall into a number of categories. Those that were geared up for remote working and were able to deploy their own personnel quickly and effectively, and those that were actually providing services which enabled their customers to deploy their teams remotely, came out of it in a better way.
Yeah, and so looking forward to next year now. What do you have we had to do anything sort of different? Have we got anything in the sort of pipeline that is going to change the way we approach transactions?
I think our business has changed dramatically in the last 12 months. In that there is that invasion of work into the home, which up until a year ago, people like yourself were actually prepared to have. And as I've said many times before, we now have meetings where we're all in t-shirts and kids are running around and dogs are barking. So that's changed quite dramatically, and it's made us so much more effective, because we can be having a meeting in 1 minute in London and the next minute in Europe or in the US. So our day is quite different. I think that the challenge for the front end and the end that I am more involved with is, how do you build in that sort of personal touch into things, and how do you get a gut feel with doing deals on camera? Most buyers want to get under the skin, and they want to meet owners, and they want to fully understand how their working relationship might develop in the future before making a commitment. And for us, I think we see that there is a balance. We need to use technology more, and we need to do. We can be more effective by using technology and doing these types of meetings. But we also need the balance which enables people to make that emotional decision that this is I'm doing the right thing. And the technology that we've been investing in is, I think, going to enable at the front end that balance, in the same way as it does in your end of the business, Duncan, where we don't all go to the data room, which is a room in the city where we sign in and sign out and take photocopies of things. It's all done now.
Remember those days?
Yeah, I remember those days. I remember the parties afterwards. But now you operate a data room where you're putting documents up, you're allowing people to view them, and we're updating them and having discussions around stuff that's up there in the cloud. And I think that from our point of view, that the investments that we're making will enable us to find that balance, electronically and face-to-face meetings, in the future, which I think is important to us, our culture, and the sorts of clients that we work for.
Yeah, no, agreed. And certainly, I'm aware of some buyers that have bought businesses without ever meeting anyone or visiting the premises, which you roll back even 2 years would be unheard of. But sort of interesting times. And what about the market outlook for next year?
So I think that there's going to be, to a certain extent, more of the same for the next 6 months. One can never quite predict how the environment will change, and if we ever wanted to make point in case it would have been what happened back in March. So I certainly wouldn't want to make any predictions. 3 months ago, everyone's concerned about interest rates and inflation. 2 months ago, everyone's concerned about getting fuel into the petrol tanks, and today it's Omicron. Now, who knows where that's going to go, but hopefully these things are factors that will create stops and starts as the economy recovers over the next 12 months. So I see some bumps in the road, but I do see a consistent return to performance in our industry.
So valuations, you think, going to hold up, all things considered?
Yeah, I think that there will be, in the same way, I don't think valuations will be consistent across the board, because valuations are driven not by us that sit down and work out our calculations through our methodology of IPRs, this multiple, and managed services, this multiple, and trying to blend that for each individual company that we're acting on behalf of. They actually are driven by buyers that come up with offers, and buyers' aspirations, business plans, and demand for certain things changes. So it's trying to probably understand what might a buyer be looking for in 12 months' time that they weren't looking for 12 months ago. We've conducted in the last 6 months quite heavy research into 2 or 3 sectors. One of them being cybersecurity, where we've looked at as you know, over 100 companies. We got kind of a very good idea there of how those businesses how those businesses perform, what's good and bad and ugly, and we can see that there is already underway a number of transactions in that space, which looks quite different to it did 12 months ago. We can see there's 20% more market entrance into that space, and we know from the conversations we're having with our own buyers that there's a lot of interest there.
So, is it a good time to consider a sale?
I think it is.
And what would be your number one tip for anyone considering looking into a process to sell their business?
As you know, Duncan, the one thing that you'll always get from me is preparation, because that's a key value to my whole life as it is with yours. Preparing for what comes ahead, I think is something that shareholders need to grasp. And the very first thing is trying to understand, what exactly are your objectives?
Yeah.
And where is it you want to go? What value do you want to achieve? And how long do you want to take to get there? If we can understand those things, and then we can get an understanding of the business model you're running, its strengths, opportunities, threats and weaknesses, we can come up with a preparation plan.
In order to properly advise a seller, you need to understand what their actual objectives are, not just understand where the value in their business is.
Yeah. And I suppose, Duncan, that's the difference between, a broker and an advisor. If you're going to truly provide robust advice to a client, then you need to first fully understand their objectives and their business. And it would be naive to think that you can pick up 3 or 4 pages of financial information and produce a plan to achieve maximum value. This, as you know, is months of preparation.
Yeah.
If we look back on the success that we've had over the last 12 months, how many hours of preparation have you put into some of those outcomes that we've achieved? I mean, we're talking. Huge amounts of,
as you know, And I think some of our clients would recognise that.
Yeah.
Well, they have recognised that, and they would say so.
Yeah, and I think that that those clients that have achieved such great outcomes have shared the same belief as us, in that what you put into life is what you get out. So they've been quite happy and as we've said, really tenacious about achieving value, and they've been quite happy to work hard to get there, as we have.
Yeah, absolutely.
And I mean, what changes have you made, to the team in the last 12 months, and sort of what's the outlook in terms of how you see the team developing over the next 12 months? I certainly see that we have a higher proportion of accountants in the firm, but what can you tell us a little bit about that?
Yeah, I think this is sort of recognition of our view that preparation is key to everything, and increased levels of due diligence, and therefore the required preparation to get through due diligence in as short a period as possible. So we have strengthened the team, and we've taken on high quality people to support that, and that's necessary for us to provide the best advice to our clients.
Yep. And looking forward to, I suppose, the next 12 months in the marketplace, do you see that funding is going to continue to be readily available, and buyers are going to continue to look for the same sorts of things, or do you see changes ahead?
We've talked before about inflation that might have an impact on interest rates, but I think ultimately funding is still going to be strong. Yep. There's still a lot of private equity around, and I feel that on the debt side, that for the right buyers, buying the right opportunities, that funding is absolutely going to be very strong.
So I think that's our roundup completed for the year. I think it's time we opened our Christmas presents, don't you?
Yes.